Wasabi! Hey, good morning, everybody. Live Forex Trading Strategy Session brought to you by Traders Way. My name is Wayne McDonald, Chief FX Market Strategist, 10-year veteran of this thing we called Forex. Yeah, let's do some technical analysis to create some trade plans for the G10. Quick look around the world. British pound has been weak, or has been strong overnight, but is losing it. Euro very weak. Swiss franc moderate. Yen quite strong. Yeah, Japanese yen quite strong. Dollar is quite strong. Aussie very weak. CAD strong. Kiwi weak. So what? Biggest winners, US dollar, Canadian dollar, Japanese yen. Biggest losers, Euro, Kiwi, Aussie. That's just a quick trip around the world. We have another, 50 to do some trade plans. Let's get started, huh? Remember, trading and invest, especially with leverage, is risky and not appropriate for everyone. Your past performance, good or bad, does not predict future results. So no matter what, stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yeah, Ken said he missed yesterday's session due to the time change. Yeah, it's a very confusing time of the year when all the clocks don't quite line up correctly. I can't do anything about that, but you know what we have done is we've put all the videos, and it's really like 10 minutes or 15 minutes after our sessions are done. We put them up on YouTube, on our YouTube channel. So you can go there, subscribe, and every time you log into YouTube, it says, hey, there's a new video by Traders Way, and you can catch our live session just literally minutes after we're done. Oh, Ken, you did watch the recording of the video. Nice. Well, there you go. YouTube.com/C, as in channel, /Traders Way. All right, cool. So let's start where we left off. Man, I'm starting to sound like my professor. Now, let's start where we left off. Like, I have no idea what you're talking about. Hey, good morning. All right, so yeah. Okay, this is where we left off yesterday. We identified this area on the pound dollar as a maybe, just maybe, potentially, could be, perhaps, someday, could be a reversal zone. Not necessarily technically do we think it's going to go up. It's just a zone where if it was going to go up, this would be a pretty interesting area for it to go from very, very technically bearish to at least neutral, and then maybe one day up. Okay? Ignore the fib here. What we're looking at is the upper end of the gray zone and the lower end of the gray zone just being range, right? Just being in a range. The other key thing that's going on here is price in this lower gray area, which we've identified as technical support based on price action, is also a psychological level of 1.50000000000. So it's been support in the past. It could be support now. It's psychologically important to human beings for some reason. 1.5 is a big deal. So could be interesting. The next part that we discussed yesterday, in about 6 weeks, we're going to get an IMF. Oh, I wasn't supposed to say that. I gave you guys some homework yesterday to go to the IMF website, do some searching through all the reports they make available. Maybe you do some reading, find something that you like, but also find when the next IMF report for the UK economy comes out. Did anybody do it? And if so, what is the date? Ken says he checked. It all seems very deep. Wyatt says April. Yeah, April 16. Well, there you go. Isn't that nice? So now we have a fundamental event in which could possibly, potentially create the technical reversal we're looking for. So here we are at 150, and we might be about a month early. But this is a 4-hour chart. If you look at a daily chart, you know, we could go through some consolidation here like we did in the recent past. Right? And then maybe turn it north. Does that make sense? Okay. So just maybe, just maybe. Now, bears that want this to come down, they have a very good argument to bring it down, and they would have sold off the 21, but how many people are actually using week charts? But that weekly 21, that's a pretty hardcore sell zone. But remember, fundamentally, things might be changing in the UK economy. There might be some wage inflation, which is a good thing. The current deflation or disinflation is very probably or certainly highly impacted by low oil prices and so on and so forth. So maybe in the near future they get inflation and they're less, you know, as far as the currency wars, every central bank trying to get their currency as weak as possible. Maybe they go and say, well, we don't want to play that game anymore. We'll go ahead and, you know, let the British pound appreciate, so on and so forth. So they might be the first one towards a change in policy, which is thus an opportunity to maybe start buying. Now, do we want to buy pound dollar? You know what? I wouldn't. But just imagine if pound dollar starts going up. That would mean the pound is stronger than the dollar. Okay. What I would rather be doing would be trading the beast. Now, the beast is the pound yen, otherwise known as the widowmaker. It's not for the faint of heart. It's got a high average daily range. It's got a lot of volatility. You better know what you're doing, because if you're sloppy and lazy, you will be punished. Okay. All right, so what to do here with that knowledge of maybe, just maybe, you think perhaps you could be buying British pound. Is the Japanese yen a better currency to use to fund your purchase of British pound? Yes or no? Relative to the US dollar. Joseph says yes. Ron says better. Wyatt, I'm going to translate, says yes. Hey, anybody else? Come on, guys, get involved. Participation. Izzy, yes. Denise, yes. Ken, yes. Kareem, yes. Wyatt, hey. Jim, have no idea. Fendi, yes. Okay, good. Well, let's address address Ken's question mark, essentially, right? If I can find my mouse. Oh, here we go. You know, when you have 18 screens, you're always looking for your mouse. There it is. All right. The issue going on here is that with something that we touched on yesterday, negative real interest rates in Japan. Okay. Now we don't, I mean, with low inflation compared to what we would prefer in Japan, it's not the world's greatest negative real interest rates, okay? But if the Bank of Japan and the government of Japan are successful in raising inflation rates in Japan, but keep yields low on government treasuries like a JGB, then inflation, if inflation is higher than yield, then in real terms, you're losing money. Okay? In that scenario, risk-averse institutional investors in Japan, like pension funds, and they have massive pension funds, those investors will sell their JGBs, get out of the Japanese government bonds, and find some other risk-free rate of return that provides a yield greater than Japanese inflation. Okay? And that means they move their money offshore, exchange it for a different currency, but that means pension funds in Japan would be selling Japanese yen, and the value of the yen falls. Okay? Is that likely to happen in the United States? No, because we're actually getting closer to raising interest rates, and Japan is not. So therefore, based on fundamental analysis of global macroeconomics, central banking policy, yield differentials, and just common business sense, I'd rather sell the Japanese yen than sell the US dollar. Okay? So therefore, if there's hope for the British pound, the hope is better based on relative strength analysis to consider a pound yen, for example. Okay? Easy peasy lemon squeezy. So if you wanted to buy the Japanese yen, what would you do? Or sorry, pound yen, sorry. Can't think and talk at the same time. Well, is that a higher high that we've just made? Yes. What have I taught you in the past? You want to look for a retracement, potentially use, in this case, this old support as the new support, and you would be creating a trade plan like that. If you're ideally, those when it tests support in a role reversal in a 1, 2, 3 scenario, ideally you have a Stokes kicker on your side. Okay. How would you qualify the quality of this particular setup that we're looking at now? Do you like it? Yeah, you certainly could fib this, absolutely. To me, it's all one and the same, but you take this to this. What is this? 382, 50%, 618. Good. You can do that too. Okay, nice. Other interesting things going on. Monthly central pivot point. And weekly M2. If weekly M2 turns out to be the bottom of our week, and right now it's exactly the bottom here, is the projected top using weekly pivot points. M2 predicts type in a question mark if you don't know. I need to know what you don't know so I can help you understand. Tell me what you don't know. If weekly M2 is the bottom, what is our predicted top for the week? This helps you for swing trading, my friends. Swing trading. I'm trying to teach you how to swing trade. I think that's something that you want to do. Right? It's Tuesday morning and we're like, let's predict the top of the week. Don't you want to know the profit target for the week? So when you type in a question mark, it's a valid answer because it's useful information to me as your coach, mentor, leader, strategist, so on and so forth. Okay. M2 predicts if M2 is the bottom. We don't know if it's the bottom, but right now it has made a bottom. We don't know at the end of the week if it is, but if that's our bottom and bulls take over, the predicted top to be 185.002. So let's just call it, since that's 1/20th of a pip, it's going to 185. Okay, that's the predicted top using weekly pivot point theory. M2, if M2 is the bottom, predicted top is M4, the range. Okay, conservative target right there. Okay, so if this weekly now contributes to the trend, right? If this weekly does act as support, ideally, with the help of this area, and this does turn, then it's perfect. It's absolutely perfect. Almost too perfect. All right, but that's what the analysis is saying. Okay, bears, very, very easy size. Where would a bear sell? You take that top, bottom, what used to be support is now resistance. Very, very easy sell if you're a bear. So the question is, if you're a bull, where would you buy? And to me, it seems like this is very, 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 very logical, right? And the next one is going to be this. So if you're a bull, let's do it in colors now. If you're a bull, where do you buy? Or where do you create buying trade plans? Here and here. What? If you're a bear, where do you create your selling trade plans? Here, here, and here. And so what happens now is just simply a matter of price action. Okay, if it did, let's say this, that you would sell on the retracement. If it did this, you could sell on the retracement. Right? If it's going the other way, so we're now at support, if it does work its way to the upside, you're probably going to buy the dip. Come on, I'm running out of room here. Okay. Does that weekly target have to happen in the same week? Sure, because next week we'll have different pivot points. And we'll have a new target for next week based on what happened this week. And remember, pivot points are not averages. They're measuring two things like price action and sentiment. How do pivot points, how does the algorithm include sentiment in their calculations? The mood of the market. Thank you, Ron. Question mark. See, if it was just an average, you'd do high plus low divided by 2, and you'd get the central pivot point, wouldn't you? Thank you, Izzy. The closing price. High, low, close divided by 3. So the last price of the period impacts the pivots. So you could have a let's say a really high at the beginning of the week, really low. But what if you ended up here? Right? What if the week was like this? It was way down here on Wednesday, but by Friday it was back up here. And it closed high. What's the sentiment of the market? If it dropped 500 pips and then rallied 500 pips to end at the opening price. What's the sentiment of the market, guys? Bullish, thank you. Okay. Do you think it's relevant information to know that the market opened high and closed low? So in this case, the lowest low and the closing price are the same. Do you think that's relevant information? Sure. Okay. So a bear, if you were a bear, okay, we were talking bulls earlier, okay, but if you're a bear because last week did this, it started high and did nothing but drop like a ton of bricks, okay, you could be bearish, right? And this is the perfect place to sell. If that's your sentiment, okay, based on price action. That's just a very basic breakout retracement strategy. In fact, you know, the best trade was here last week. Okay, so really what that tells us is we're range bound, right? All right, a quick question here. Mike says it's his first day here. Welcome, Mike. 1, 2, you rock. Mike wants to know if he was interested in buying this test here. How do you pull the trigger? Yeah. Ultimate question. Okay, first of all, you acknowledge to yourself this is a buy zone. The way I tend to do this is I draw using MT4. I like to draw little reminders using the drawing boxes. And if you're patient enough, if you have the time, you could place colors. Now, I like seafoam is my buy zone. So I acknowledge to myself now, that is my buy zone. You can take it even further and leave a note for yourself, a little memento, that this is your sell zone, okay? But it's green, so you got to change the color. And I like this other one here, rosy brown. Boom. Okay, so there is, let's say, my buy zone. Now, you know what? I'm going to go one further just since we're doing this. Might as well go all the way. This is my other buy zone. I want to buy here too. Well, we might not get down there, but if we did, I want to leave a memento to myself, a little note to myself in the future. If we go down there, I have to remind myself I might be interested in buying that dip. Okay? Good. So we're in a potential buy zone, right? Now that's a bearish engulfing candle. That's a little scary. But nonetheless, let's take a look. So this is an hourly chart. So this is what I do now, Mike. I very often just drop into a 15, boop, and I've left a note for myself. This is a buy zone potentially, right? Now, is the 15-minute oscillator, is it incredibly overbought or oversold? Yeah, it's oversold, which might be a sign of weakness. And I'm trying to buy at support, right? When oversold. Because if it's oversold and weak, it might not have enough energy to break the support level. In particular, not just price action, but it's also a weekly pivot. Okay. Okay, fine. Okay. Does it still look okay to you, Mike, as a trade plan? Okay. Now, if the oscillator was, let's say, way up here and just starting to fall, would the trade plan still look good to you? Not as good, right? It'd be more of a sell because it looks like it's falling fast and furiously and it has lots of room to fall and continue falling. So less ideal. Right? So looking at this scenario, if I was a bull, I feel like I'm in the right place price action wise. I feel like I'm at the right price, let's say because of a central pivot being technical support, just price action support. So now I have to line it up with some sort of trigger, right? So let's drop into a 5-minute chart. And now, excuse me, now if we were looking for a trigger, the trigger would probably occur on this chart, okay? The first trigger you could possibly get if you're unbelievably aggressive would be simply to trade when this 5-minute oscillator goes from 99% oversold. Let me not exaggerate. Let's get the number. Yeah, it's 96. Just 96 point something oversold. Okay, it's 96% oversold on the 5-minute chart. So if it turns here and goes back in the trade zone, what it's telling me is that it's measuring these recent candles here and that the candles are having extreme difficulty making lower lows, and in fact are starting to make higher highs relative to the previous few 5-minute candles. Which means it's not falling anymore. The next thing you could look at would be a moving average crossover. I use the 5/8. Okay. And the next use, because they're all different, they're all fine entries depending on risk tolerance, aggressiveness, confidence, and all these things, right? Another thing you could look for are reversal patterns. Well, instead of me drawing them, why don't you tell me? Mike, what's your favorite reversal pattern? Mike, many years trading, no favorite? Come on, Mikey! All right, fine. We'll do the 1, 2, 3. A couple of people said 1, 2, 3. All right, the first part of a 1, 2, 3 is a double bottom. 10 years worth of losses. Yeah. Okay, there's a double bottom. Okay, that would be one person's entry. They would like to pull the trigger here. And the oscillator on this 5-minute chart would probably look like this when they pulled the trigger. Okay? The next part would be after price has made a higher high relative to this high. Okay? And they would look to go long here. Okay? and the oscillator would probably look like this. Oops. Okay. That's how you would do that, Mikey. Never really had any kind of trade plan. Well, you know what? I hope you found a home, Mike. I hope you're looking at this and going, OMG, WTF, what have I been doing all these years? And right? I hope you found a team that you want to be on. Wyatt wants to know where you would stop. Well, again, what kind of trade plan is it? Is it a spot, a swing, a carry, so on and so forth? It really, that's your risk management, right? But obviously anything less than this, right? So to me, the entry and the stop for almost all the trades are kind of the same. Yeah, Mike says you've been to dozens of live rooms and stuff like this. Cool. Well, I hope I can help. Let's just put it that way. You're a poor learner. I'm a patient guy. Let's keep trying. So I hope you'll be here tomorrow, Mike. All right, so to me, guys, my entry is generally the same. You know, because what's different when it comes to trade plans is your exit, really. Okay. If you're watching the chart, you could enter here and let's say have a stop here. Okay. If it's a swing trade versus a scalp versus a spot, does the stop really need to be in different places? If you're actually managing the trade? See, if you're not watching the chart, sometimes you have to throw down a limited order. You can't be in front of the charts 24 hours a day. You got to play that differently, right? But if you're in front of the charts, you're watching the trade, and you go long here, and then it does this, do you still want to be in the trade? Because I'll tell you what, hope's not a strategy, right? You can't hope that it'll go up at the next fib level. Hope's not a strategy. If you're wrong, get out. I'll tell you what, there's always a better trade to be on, no matter how good or bad your trade is. Once you're in your trade, there's always going to be something better to be doing. There's always a better trade. All right? So on a good trade, if it's profitable, right, you jam your stop and then go find another trade. Okay? So if you do long off the central and then, 25 minutes later, you find that it's now making a lower low because what did the bears do? They sold the retracement like a bear would. Of course they would. All right? So you might as well take the loss and go find something else to do. At least it's a small loss. Put it this way. Do you want 5 small losses or 1 big loss? Well, that's a tough question, though, because some people, because they don't have a plan and they didn't do any long-term analysis, they don't have a fundamental bias, they think making a lot of bad trades is better than making 1 bad trade. It ends up being the same. Poor planning. Okay. If you start with a fundamental bias, confirm it with technical analysis on the longer term charts. So now that you have a strategy, then the rest is just tactical. It gets much easier that way. What do you want to do with the Japanese yen? Buy it or sell it? That's called a strategy. Tell me, guys, what's your strategy? It might not be, it won't put you in a trade in the next 5 minutes or 5 days. Okay, but still tell me, what is your strategy for the Japanese yen? Do you want to buy Japanese yen or do you want to sell Japanese yen? You tell me. Come on, tell me. Tell me, what's your strategy? Right? Mike, you don't have a strategy? Pop a squat on the bench. Okay? Right? Think of it this way, Mike. If you're a hedge fund manager and you didn't have a strategy, do you think you'd be able to raise money? If you were a banker, could you possibly be in business if you didn't have a strategy? I mean, obviously you got to have a strategy, right? And back that up with data, right? Now, Jim, you got to be careful with the language. I think what you're saying is buy yen pairs, which means you're selling Japanese yen. Yeah. Well, fine. We got to be careful with the language, right? We got to be nitpicky over language. The other stuff, nice and relaxed, but language, we got to understand each other. But anyways, okay, good. That's the strategy. But what does that do for you today? Does it put you in a trade? No. But I should be able to bump into you 3 weeks from now and say, Jim, what's your strategy on the yen? Are you right? Are you still selling yen? Yeah, probably, right? Right? So now what? That means you're going to sell Japanese yen to buy a different currency. That's why the yen pairs go up. By the way, do you guys still have sound? I just got an error message pop up. Yeah, you did. Okay, good. Muchas gracias. Muy bien. Okay. You've decided your strategy based on whatever it is, long-term charts, a fundamental analysis, flipping a coin. Honestly, it's all the same to me. You have a strategy. So yeah, so Mike, at least flip a coin and create a strategy. I'll tell you what, even if your strategy is wrong, you'll probably either make money or lose a lot less money than you're losing now. You're going to be better off. Flip a coin, something. All right, so if your strategy is to sell Japanese yen, cool. That means you're buying yen pairs because you're selling Japanese yen to buy a currency pair. Okay, so you want yen pairs to go up. So if you want yen pairs to go up, what do? Buy at resistance or buy at support? Right? So where's all the complication? Why does everybody make this so complicated? Okay, good. So you do this for me now. Open up your favorite yen pair, whatever. Pick anything with a yen on the right. Okay, start with how about a 1 hour chart? Identify 3 levels of support because based on your strategy, you can only do one thing. Buy at support. So give me 3 opportunities to buy. Give me support 1, give me support 2, give me support 3. And what do you do when price is not at 1, 2, or 3? Yeah. Wait. What do you do when price approaches 1, 2, or 3? It's getting in support 1 zone, support 2 zone, support 3 zone. And like, listen to my language. Is support 1 pip thick? No. Pick a zone. Create a zone like I did. Draw it out. Okay? Necessarily buy to be stuck. When price gets in support zone 1, support zone 2, or support zone 3, you drop into a smaller time frame, no longer on the 1 hour chart, maybe a 15-minute, maybe a 5-minute, maybe a 1 minute. It's your trading, whatever you like. And look for things, look for triggers. Oscillator crossovers, moving average crossovers, reversal patterns, so on and so forth. Because now you're trading a reversal pattern with an oscillator crossover at support in the direction, of your long-term strategy. Even if you're wrong, Mike, I bet you are going to be less wrong more often. And you might actually potentially be right. Maybe, just maybe, you get lucky enough, right? Even if it's dumb luck. But I'll tell you what, Mike, if you don't know anything about fundamentals, which is fine, and you look at your long-term charts and you can psych yourself out, right? I can see you're already psyching yourself out. Oh, it's going up, but it might come down because of blah, blah, blah. Okay, fine, you're talking yourself out of it. Even if you flip a coin, Mike, I'll guarantee you'll be better off. All right, so Mike, you definitely need to be here tomorrow and the next day and the next day and the next day, okay, Mike? Keep participating in the group and I'm going to help you. Okay? Just put $1 million in your Trader's Way account and everything will be good. Okay? Good. I'll take care of you, Mike. Stick with us. And by the way, you have a solid team of people in the room with you, too, that have been through this whole scenario. So, yeah, you're not alone, my friend. How many people have worked with me for over a year? Daniel? DeBista? Anybody else? Yeah? Nuno? Right? N. Silva, I think, is Nuno. Yeah. Denise? Yeah. This is a hard gig, Mike, but we'll get you squared away. Okay? And everybody else as well. All right, cool. So, do we have a trigger yet on the 5-minute chart? Has the oscillator gone into the trade zone? No. What does that tell us? That these candles have not created a higher high. Okay? They almost stopped making lower lows, but they haven't made a higher high. And we got a 5-8 kiss, but not a 5-8 cross. It's very, very close. Okay? My spidey senses are telling me you should probably watch 182.5, which is about there. Okay? Yeah, I'm throwing in a psychological level too. Okay? Or you just let it fall. Or you got suckered into this one and you longed it here and it makes a low, take the loss. Quit your whining. Hey, George. Yeah. George up in Canada. Okay, let's pick another one. Yeah. Good to see you, Georgie. All right, so let's just pick another one here. I like dollar yen, but whatever. Okay. I got a real simple chart here. This USD yen, any particular reason you think it might have stopped rising? Is it possible it might have been impacted by the reversal pivot cluster? Maybe. That's daily R2 clustered on a weekly M4. Okay. R2 is the predicted top for the day. Weekly M4, right. R2 is sort of more of the aggressive daily target. M4 is the conservative weekly target, and they just happen to overlap each other by about a pip. Throw in the psychological level now of 122, and you have a nice little perfect storm, don't you think? Right? This is 122. What else do you see? Test, drop, double top. Okay. So if you're a bear, you would look for that. You get it? If you're a, what would you be doing? You're looking to buy it probably down in here. Right? There's only two places you could possibly do this, right? There's your buy, there's your sell. Anything else is just a bad trade. Do you guys see that? Good job, Georgie. Okay, is it starting to click? If you're a bear, do you sell here? Think of it. If you're a bear, you might sell at a reversal, especially with a double top if you're looking at it on a smaller time frame. But once it's dropped, what are you going to do? You can't sell it. You can only sell here, right? Or you could sell here, but not until after the break. So if you're a bear, you want it to rise. Why would you want it to rise if you're a bear? So you could sell it high. And then if it makes a lower low, maybe you take some profit in here where it's risky. And if it comes back up and retests this black zone, sell it again. Why? Because it's high. Sell it high. Okay? So let's reverse it. If you're a bull now, give me 3 levels of support. Okay? How about here? Right, you can do that kind of stuff. Here, let me redo this. Let's draw it on a chart. Oops. Okay. I'm going to put it kind of like that. Give it a little extra something, something. Okay? It's really kind of that area. Fine. Okay, there's one. Does that seem like a reasonable place to you guys? Maybe there. And a third one. How about here? Okay, so let's simplify. Yeah, let's do it like that. Let's simplify here. Okay. 121. Okay, I'd like to buy this near 121, or consider buying it near 121. I'd like to consider buying it near 120.50, and I'd like to consider buying it around 120. There's some other reasons there, but it's pretty basic, right? 121, 120 and a half, 120 even. Okay. Those are the areas. Yeah. George has COT not as commitment of traders, but as change of trend. Okay. Like if price came down into here, what do? Move from the 1 hour to the 15 or 5 and look for moving average crossovers, oscillator crossovers, reversal patterns and stuff. So if you saw on a 5-minute chart a reversal pattern when the 15-minute chart was way oversold, do you think it has a probability of rising at least to the point where you can move your stop to break even? Yes or no? Okay. Yeah, it's higher probability, right? And you know it's easy to tell when you're wrong because you're not in your green zone anymore, right? It's pretty easy to know you're wrong is this. You probably don't want to be long anymore. Okay? So let's say this fails and you drop to 120.50 on your hourly chart and you say to yourself, "Oh, I'm in a green zone." Drop into a 5-minute and you notice a double bottom and a Shanghai open. You long it, jam your stop. Now you even got a market open. Okay. Is it going to go up forever? I don't know, because I'll tell you what, if you bought it at the Shanghai Open, what are the London boys going to do? They're going to see that the market is overbought relative to the overnight move to the London boys, and they're going to fib the top to the bottom, and they'll probably short it in this area. So we don't know. But by the time London opens and price is up in there, are you able to move your stop to break even? Yeah. And if the London boys wimp out, what's it going to do? It's going to drop, and then the New Yorkers are going to make the 1, 2, 3, and you might even have the next opportunity off of this zone. Okay? And what do you call that pattern? Well, it's not necessarily a pattern. Well, that's a 1, 2, 3. But how do I describe this reversal in my book? How does the Forex market tend to reverse? Like an old man easing into a hot bath. Nice and slow. And that's what this is here. You know, it goes from falling into support, and then it consolidates and breaks out, retraces back, and gives you plenty of time to be in there. Okay? My gosh. We are out of time. OMG. Can't believe it. We're already out of time. I have so much more to do. Can we regroup tomorrow and go over some more charts? Yeah? You want to do this again tomorrow? I always intend to go through more charts, but then we always get good questions, and all of a sudden we dive into the minutia of trading, but I always enjoy my time with. Yeah, essentially, George. I got a lot of other things going on, George. So this is my time with the team. I'm also on fxstreet.com every Friday now. I believe I'm the featured speaker as well of the month at FX Street. Very nice. Lots of nice stuff going on. Yeah, there's something like 400 registered 1 week early. I take that as a sign and I take it with great honor and appreciate. So, hey guys, peace on earth. May the pips be with you. May our profits be above average. I'll be here 7:30 a.m. New York time tomorrow. I hope you can make it. If you missed the session, find us at youtube.com/c/tradersway. And if you subscribe at YouTube, you get the updated video. I will now shut down the room, upload the video. It's that fast. See you tomorrow, guys. Thanks for being a Trader's Way client. Cheers.